what's really interesting is the market just turned and gave us a sell signal last week. And gold miners have found a bottom. They're starting to rally and move up with some pretty good volume and some power behind them. So we're seeing definitely money's rotating, as you're saying, out of equities, out of growth stocks. And now it's starting to actually rotate into the precious metals space. I think there's room for gold miners like GDXJ to rally, 5, 20, 30% potentially, maybe go up to the recent highs that they had as that defensive play. And we've seen this before in 2007, 2008. We start to see the stock market become weak and money piles into commodities like the precious metal space very quickly.
Popular technical analyst, trader, and the founder of the Technical Traders, Chris Vermeulen, recently stated his updated price predictions for gold, silver, mining stocks, and the U.S. equities market. Chris is expecting a couple of more bullish weeks for gold, silver, and other precious metals, followed by some rocky months as economic conditions in the United States worsen. The technical analyst is predicting at least 6 months of worsening economic conditions as the impact of the Federal Reserve's aggressive interest rate hikes finally begin to show. Chris believes the impact of the central bank's rate hikes will be significantly severe on the economy. He describes it as a complete financial reset that will have investors scrambling for safety in safe haven assets like gold and silver. With hundreds of thousands of individual investors, hedge funds, and other categories of investors putting money in silver and gold, Chris estimates that gold will increase by at least 39%, going from the current price of $1,942 to $2,700 sometime next year. If the rally continues, Chris believes the leading precious metal could climb even further to over $3,000 per ounce. But that won't happen until at least the second quarter of 2024, Chris warns. Before this huge rally begins, Chris is predicting a bit of weakness in precious metals and equities as the U.S. economy takes hits from all sides. On Friday, the U.S. Bureau of Labor Statistics released jobs reports for August, stating that non-farm payrolls grew by a seasonally adjusted 187,000 for the month, slightly above the Dow Jones estimate for 170,000. However, the unemployment rate rose sharply to 3.8%, the highest since February 2022. Non-farm payrolls estimate for July was revised down from 187,000 to 157,000. Average hourly earnings increased by 0.2% for the month and 4.3% from the same period in 2022. Both were lower than the respective forecasts of 0.3% and 4.4%. Friday's data suggests the labor market might have begun deteriorating and the Fed will be motivated to at least skip one rate hike during its next meeting. We will now bring you clips from Chris's recent interview with SOAR Financially as he gets into more details about his outlook for precious metals, equities, and the overall U.S. economy. Please watch the video to the end, give it a thumbs up, and subscribe to the channel for more videos. Also, ensure you drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and contributes to the channel's growth. Thanks, and enjoy the video.
Yeah, I mean, gold's doing exceptionally well. When you look at, the monthly chart of gold, yeah, it's been trading down and sideways for like 3-4 months. But really, it's still trading. When you look at the big picture, it's trading right up near all-time highs. I mean, it's not far away. It is a very strong asset. It's known as a global kind of defensive safe haven play. So it's not just, North American people buying into gold. It's the whole world is nervous and they continues to just keep trickling into gold and it's holding its value. You look at gold miners, they're down like 45% from all-time highs where gold is right up there. And that to me is a sign that we're seeing global fear. It's not just speculative, money moving around. It's a lot of countries, a lot of different people constantly buying gold as a kind of defensive play. So the fact that gold's holding up really well is a very good sign. And I think eventually, I think next year it's going to have a very big rally to the upside and start to hit those big upside targets that a lot of people have been waiting years for. I think gold could actually still have a pretty big correction if the stock market and the economy kind of goes down the toilet and we see kind of a financial reset. I think we could see gold potentially back down to $1,700, $1,600. And to me, that's not a bad thing. It's not that far from where it is. I think it'll be an opportunity. But once that downside potential panic selling has taken place, I think we're going to see gold rally next year, probably 2,700 very quickly. The question will be if it can get up into that 3,000, that $3,400, $3,500 dollar mark, US dollars. So I think next year we're going to see gold hit 2,700 at some point. But I do think there's actually some weakness in the precious metals space until we have this financial reset. And it's going to just put some pressure on precious metals, simply because almost every time when we see a financial crisis take place, a big bear market, the dollar tends to be a safe haven play. We see the dollar index rally. It is one of the reasons why gold goes lower. Plus, there's going to be forced liquidation margin calls that pulls gold lower as well. And it's just part of the way the markets are all interwound. So a little bit of weakness in gold, is perfectly normal. I think it'll be a screaming buying opportunity. But as I mentioned earlier, to try not to confuse people, I think gold, silver, and miners are going to be very strong here for the next couple of weeks as money's just starting to rotate into them. We got a short-term kind of sell signal on the stock market. So money's moving away from stocks and they're looking for defensive sectors like gold miners or different assets to move to right now. So short-term, I'm bullish on gold. Over the next 6-8 months, I'm actually bearish on gold. And then next year, I'm really bullish on gold. So, you have to understand what time frame you want to focus on paying attention to or know, understand that. Seasonality, I watch it all the time. It's really interesting. It works pretty well across a lot of different commodities and sectors and things like that. I never trade based off it. We might see an upward positive bias. It's always, fraction, a percent or two difference, which in the grand scheme of things, seasonality is not a super strong signal. But yeah, we should see naturally some strength. And I think the markets are kind of in that situation where people are getting a little nervous. We're seeing some fear. A lot of people are taking a pretty good loss. A lot of people dove into the stock market about a month and a half ago. And I remember telling subscribers saying, listen, everybody's piling in hand over fist. They're paying premiums. And right after that, the market's topped out. And so believe it or not, a lot of people bought in right near the market high about a month ago. And, the AI sector ETF is down like 15, 20%. The ARK ETFs are down 15 to 20%. A lot of people, they're down quite a bit. And so now they're giving up on tech and now they're looking for, a new place, which happens to be gold miners.
Pause in the Fed's rate hikes will likely suppress the dollar's strong gains and lead to a stronger demand for dollar-denominated commodities, including gold and silver. However, the markets are still pricing the possibility of another rate hike by the end of this year. That could lend some more support for the dollar, make Treasury bond yields more attractive, and cause some downsides in precious metals. This all ties in nicely with Chris's predictions for gold and silver, and the timeline for said predictions. During the interview, Chris also gives his predictions for the stock market, on which he says he is extremely bullish in the long term. With the exception of gold and silver mining stocks, Chris expects equities to perform poorly in 2024. Let's get back to the interview.
I think the markets are clawing their way back up to potentially to try and get back up to all-time highs or a major double top. And I think the financial markets are on the verge of a big downdraft. I think we're going to run out of steam here. We've been seeing lots of money pile into the growth stocks, technology, AI. It's been a bit of a feeding frenzy. The same group of people that kind of really drove up the growth stocks during COVID before they topped out are kind of back again. And they've been buying those stocks. And we've seen the money start to flow out of there over the past month. So I think the markets they're getting a little into the nosebleed section. I think they're about to run out of steam. They might go a little higher, but I'm pretty bearish on the equities market in general, looking forward longer term. Yeah. Well, what's interesting is the way I use technical analysis, cycle analysis, and how I use intermarket analysis, which is, as you know, most asset classes are connected in some way. If something goes up, something goes down somewhere else. Money is constantly shuffling and shifting around through the financial markets. And what's really interesting is when the stock market was out of favor, this was early this year, and even parts of last year, we saw the gold miners rally very, very well. They took the lead and went higher while the stock market was not favorable. As soon as we got a buy signal in the stock market, we moved into tech, the NASDAQ, the SP 500, the stock market took off. Gold miners put in a double top this year, and they've been going sideways and lower pretty much, for several months. And what's really interesting is the market just turned and gave us a sell signal last week, and gold miners have found a bottom. They're starting to rally and move up with some pretty good volume. we're seeing definitely money's rotating, as you're saying, out of equities, out of growth stocks, and now it's starting to actually rotate into the precious metals space. I think there's room for gold miners like GDXJ to rally, 5, 20, 30% potentially, maybe go up to the recent highs that they had as that defensive play. And we've seen this before in 2007, 2008. We start to see the stock market become weak and money piles into commodities like the precious metal space very quickly. And so I think we're back into that. And I'm looking at higher prices for the miners going forward. Strategy, our analysis that's saying, hey, the stock market has now officially turned into a downtrend. We don't want to hold stocks. I like to look at the stock market like the ocean. It's a tide. Either the tide's going up and most stocks are going up, or it's going down. And when it's going down like it is now, we don't want to be holding stocks because most of them, as you know, all boats go down with the tide. So that is our turning point. That's our trigger. Our technical analysis says don't hold stocks, but gold miners they buck the trend. They can buck the trend. They've done it this year crystal clear, and it looks like they're starting it again. So even though like GDX, the gold miners really aren't showing any new trend to the upside, our technicals are saying, well, it looks like the money's about to flow there and that new trend is about to start.
At the moment, there are at least two events which could continue to support gold prices. The first is the dollar's retreat amid growing excitement of a Fed pivot. In addition, China has announced several measures to defend its ailing economy. Most of these measures have and are expected to continue to propel gold prices within the next few weeks. Chinese investors have been known to heavily invest in precious metals during moments of economic uncertainty. With the world's first and second largest economies on the verge of significant economic declines, do you agree that gold and silver are heading for some great months in 2024? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.